Hello everyone, welcome back to another video. In this video I'm going to talk about an incredible ICT trading strategy you can use almost every single day in order to get into the market, get out of the market, make profit, pass your funded challenge, and ultimately to become a profitable trader. This is in fact called the ICT silver bullet strategy. You've probably heard people on YouTube talk about this before, but I went through them and it was a hassle just trying to learn about it. So in this video, I'm going to tell you A to Z what the silver bullet ICT trading strategy is, okay? So without further ado, let's get straight into this. So the time frame we actually trade this strategy on is on the 1 minute time frame, 30 seconds, 15 seconds. However, I do recommend the 1 minute because the 1 minute is when the candles form properly. You know what I mean? Like 15 seconds, it's too volatile for me. And 1 minute, the candles are wonderful, and yeah, I could just trade it properly, you know. So the times that you trade the strategy at is New York time. So how to get New York time is you press UTC -4 right here on the bottom, and it is from 10 a.m. to 11 a.m. okay. And the pairs that you can trade this on is on forex pairs or indices, okay, or like futures, so such as SP 500. I'm going to show you an example on that also. However, I've got an example on Euro USD too, okay. So if you don't see a trade on Euro USD for the day, what you can do is you can just go on SP 500 and you will find a trade to actually enter, okay. So from 10 o'clock to 11 o'clock, okay. So 10 o'clock, what we see, let's just say this is 10 o'clock and let's say this is 11 o'clock, okay. So what we have to see before these times is we have to see a set of liquidity forming, okay? This can be in either side of the market. So markets usually move like this, you know, it moves random, you know. So we see a set of liquidity right here, and we see a set of liquidity maybe right here, okay? So let's do that. There you go. So this is the market right here, okay? So what we mark out is just a set of liquidity before price went into this time, okay? So 11 o'clock. So right here there's a set of liquidity. Let me make this black so you can see it. Right here there is, as you can see, there's 3 highs right here, okay? So that's just what you mark out. Again, you stick to the 1 minute time frame. You don't go to any other time frame, right? So yeah, there you go. We marked out our set of liquidity. Now we just literally wait for the market to do what it does at 10 o'clock, okay? On the 1 minute time frame also. So we just wait and price comes down and takes the set of liquidity, okay? There you go. So price took down, set of liquidity. Okay, so what do you do after this? After this, this is what makes it a high win rate. You guys all know what market structure shift is, but it's not that easy, okay? So what we have right here is the market structure shift, and we also have some sort of displacement forming right here, okay? So if you don't know what displacement is, I've said this in many videos. I'll explain it after that. And then what you do is you can enter off optimal trade entry, order block, imbalance, the fair value of the range. So yeah, you can just do that, but imbalance is what ICT's favorite is, okay? So he just enters right here, and then you target opposing liquidity, whether it's right here or whether it's this high right there, okay? So displacement, what is displacement? Displacement is when we get, let's just say we have something like this, market structure shift. So the candles which form the market structure shift have to be fast, okay? I can't explain it very quick like that, but it has to be big. It has to be really aggressive when taking out the low right here, for example, or same as when we're breaking the high, okay? And this shows that market is putting in volume to one side, okay? So we might start shifting trend, retrace to an imbalance, and then go even lower, okay? So displacement is not a must, however, it's very, very, very good when you see it, okay? And then after this time right here, you just stop trading the strategy. I recommend after you literally just get a 1 win, you stop trading the strategy, because I've back tested it and I've seen if you just chase the entries too much after you get 1 win and you keep on chasing the entries. So for example, after price takes out this liquidity right here and then you start looking for another trade, I've checked this myself, it just doesn't, market just likes running to one side, okay? From this range to this range, okay? So I wouldn't recommend that. It would work, but I just wouldn't recommend that for myself, okay? So yeah, that's just how it works. And I do want to say that there is much more to this, so let's get straight into the chart examples. If you can't watch an ICT 2022 mentorship video for 1 hour long, and you're here to watch short videos of like his strategy, and you can't even watch this video to the end, and there's no hope for you, you're not going to become profitable. And before I carry on, I do want to say the mentorship is only $49.99. So I simplify ICT content. You can learn ICT content, however, it takes you a long time. And the strategies I've got, the two strategies, ICT does not teach it. It's me and ICT combined. However, it's like 60% ICT, 40% my own. So if you do want to learn the two strategies, link in description, $49.99 lifetime, and it's on discount right now. The price will go back to $119 very soon. And also we do have learn and earn, so we have live trading course 2 times a week, and you can make gains with me while learning something. Okay, so anyway, and there's also pre-recorded videos which you can learn from, and a massive community of 150 traders you can join in order to elevate your trading journey. Okay, so anyway, let's get straight into this example of the ICT silver bullet strategy. Okay, so let's go to 10 o'clock and let's mark everything out. It's 10 o'clock being right here. So what do we do first is we mark out 10 o'clock, 10 a.m. to 11 a.m. New York time. Okay, so 10 a.m. all the way to 11 a.m. There you go. We mark this out, and now we mark out liquidity points. Okay, so this point can be liquidity. This one right here can be liquidity. This one right here, because we've got a nice set of lows, so being right here. This one right here can be known as liquidity right there. Okay, this one also because of course we have these highs right here created. Okay, so equal highs. So now we just wait for one side of the liquidity to be taken. Okay, after 10 o'clock. Okay, there you go. Price just took out this liquidity, and then price started going down. Now we just wait for a market structure shift after this takes place. So the market structure shift point would be right here. I would like to see a break of this low. So now let's see if you get it. Boom. Market structure shift with displacement. You might say, well, yeah, look, we just took this liquidity right here. Why am I not going to look for buys? Because as I did say before, once one liquidity gets taken and you're looking for your entry, just leave it. Okay, just enter in that side of the market. And also this displacement tells us a lot. It tells us that market starts shifting into this side of the market. Okay, so this is displacement. Price had a massive move down when having a market structure shift. Okay, so I'm going to call this actually I'm just going to leave it like that. This is the market structure shift, and we took this high liquidity right here. Now what we do is we just wait. Fair value gap. What I'm going to cover is this high, because a fair value gap is formed of 3 candles. Okay, so this one right here, this one right here, and this one right here, and the middle one is the fair value gap. So what you're going to do is you're going to cover the high of the first candle being right there. Okay, that's just basic ICT stuff, you know. So stop loss above this high and take profit opposing liquidity. So the opposing liquidity was actually right here. However, this is only 1 to 0.25. In my mentorship, I don't like to go anything lower than 1 to 2, anything. Okay, usually go from 1 to 3, but the opposing liquidity, for example, could be right here. Okay, which is a very nice point of liquidity also. So let's just target that, which is a 1 to 2. There you go. We got the entry. Price is consolidating for a while, and there you go. Take profit. Smashed. Okay, wicked, and then price started going a little bit higher. Okay, yes, you did have to have some patience in this, but you know, patience is what pays in these markets, like I've said many times before. And if you did mark this one out as liquidity and you did not see this one, so let's just say you mark this one out, what happened is price took it out. We had this market structure shift right here. Boom. However, there was no FVGs right here, so if you did enter maybe off optimal trade entry 0.705, pretty nice, you could have got your entry right here. Okay, so both sides of the market did actually have an entry and stop loss below this low, and of course you're going to target this fair value gap, because if you target this opposing liquidity, that's a 1 to 6. That's still really reliable. However, we started reacting off this zone right here, so I would have closed right there. Okay, so yeah, both sides of the market did end up getting respected, and let's go on the next example. Next example being right here. So if you saw the times which I've actually checked these out, so this one was at 30th of March, this one 28, there was actually not a trade, but I'll show you S&P how there was a trade. Okay, so if you trade S&P and euro, then that's looking for you, you know. Okay, so same thing right here. Let's replay price and do the exact same thing. Okay, you do this day in and day out, and you could actually become profitable in these markets. So 10 o'clock till 11 o'clock. Let me just mark this one out as 11, this one out as 10. Boom. And this is where we start trading. Now we just mark out the liquidity points. Liquidity points can be right here. Boom. This low right here kind of set up as equals. Okay, so let me just, there you go, 10 o'clock. Okay, there you go. This set of liquidity has been confirmed even further. Why? It's because we got these equal highs created right there. We can mark this one out as liquidity and this one out, but let's just see which one gets taken. Okay, there you go. The liquidity just got taken. Now we need a market structure shift. So the market structure shift being of this low right here. And there you go. We did actually have some displacement right here because we had a market structure shift and we had multiple down candles. So massive volume coming down to break it. So there you go, displacement also formed. And then we just enter off the extreme FVG being right here. And as I did say before, fair value gaps are formed of 3 candles. 1, 2, 3. I'm going to cover the first high, okay? So now we just get our entry, or which is right here. Stop loss above, you can actually cover this high, but I just like covering the fair value gap high right here. And then target opposing liquidity, which is right there, okay? So opposing liquidity has actually changed because this one actually got taken out. So I'll just target this low being right here, okay? Which is still perfect. Just 1 to 3, it is reasonable, I would say. And there you go. As you can see, price quickly came down and did its thing. And you can also top up your entry because as soon as price tapped into this fair value gap, we had another market structure shift right here with displacement. Because again, these 2 black candles right here had massive volume. Just enter off this right here, and then you would have topped up your entry, and you would have got even bigger RR. So if you have a prop firm challenge, which is 8% pass, you could have passed it much faster if you entered both of these trades, okay? So there you go. Let me now check SP500. Now I'm going to give you guys the chance to actually mark out everything yourself, okay? So let's go on 10 o'clock right here. And now what do we do first? We mark out 10 o'clock till 11 o'clock. You don't have to mark this out because after you start doing this so many times, day in, day out, you'll be like, okay, this is 10 o'clock to 11 o'clock, really. So now what do we do? Now we mark up some liquidity points, okay? So this is a liquidity point right here. Nice, equal lows. Mark this one out. These highs right here, I mean, they're not the best set of liquidity point, but there's one right here. And that's just what we do, okay? And there's also one right here, but this is pretty high up, okay? So now we just wait for a set of liquidity to be taken out. So there you go, one set of liquidity got taken out right here. We had a market structure shift, boom, right here. So wait, did we have a market structure shift? Yeah, I would say we did. This high. Now we can enter our trade at the extreme FVG, which is right here, but we can still wait. Okay, this set of liquidity just got taken out also, and this set of liquidity got taken out. Okay, so this might really confuse you because you had 2 sets of liquidity taken out right here. Upside, upside, we still haven't retraced back into this fair value gap right here. And really and truly, I'll just cancel this entry because price took out the liquidity 1 minute after 10 o'clock. I would like to see it being taken out a few seconds after, you know, so 10 o'clock it took it out. But still, it don't mean that this entry is not valid. But there's still an entry right here which you can actually enter. Okay, so let's see what happens right here. Boom, this liquidity fully got taken out. We had a market structure shift right here. Now we just wait for a retracement of a high. You can enter right here, and let's say you're still going to enter off this one, but you're also going to enter off this one right here. As I did say, I don't recommend you enter like this. I recommend you only enter one side of the market. So this one, boom, but then this one is going to be a 1 to 2 RR, okay? So you're going to cover this low right here, opposing liquidity. And this one, risk 1%. You're going to lose 1% on this one. And this one, you're going to gain 2%. So you're going to gain 1% at the end of the day anyway. And this one actually ended up tanking up to 1 to basically 4. And then we had the reversal, okay? Straight after 11 o'clock, we started reversing. Everything has meaning here, okay? 11 o'clock, we started reversing. We entered off the fair value gap. We took liquidity. Every single thing in the strategy has a meaning. So yeah, everyone. That's it for this video. Again, if you do want to join the mentorship, you would gain a lot of knowledge from it. You'll be a part of many students to pass the funded challenges, to trade with each other, and the community is great. It's full of ICT traders, and you will actually learn a lot. Okay, it's cheaper than a cheap pair of shoes. Only $49 lifetime. I could charge much more for this, but again, ICT does teach us to go it himself. So yeah, that's it for this video. I'll see you guys in the next one. Take care.